Well, good morning, everyone. Scott Henderson, shooter. Hey, we're going to try and go over some charts. Just try and do this justice this morning. Of course, at the end of our presentation, please do review our disclosures. Now, just a little heads up on our timing this week. I am going to be traveling the remainder of the week, so this will be my last video for the week. If I do find a home and get set up, I don't have the time to tear down my rig and bring it with me. And I really don't have a mobile way to connect to everything that I have. So you're on your own. And I think we're pretty much in the same place in the market. I think we start this slow grind lower, but let me jump into this so you guys can get a good visual of where we are. Okay, so let's start off with the dollar. Now, we really need to get back above these highs for us to have a big sell. So, right now, the drivers in place in the economy are really not favoring a drawdown. What we have is I would say a group of people or a chunk of people that are concerned with what's going on in the Middle East, but we haven't reached that catastrophic level. When we look at RSI, it's not overbought. We're just a little above the 50% level. MACD cross is flat. So I think we could stay in this range. I don't have the breakout until above 100 on the dollar. It gets back up there, we start seeing more of a sell. Just realize that. But even still, if we look at a leading diagonal as far as our wave structure or an XABC pattern, which is likely in a bounce like this, our C should come in around 101, and then we back test back to 90. So we get back into a new shelf, a new range, and then we probably continue to be in this chop. And the dollar is a big factor in that. So I wanted to make sure I brought that up. All right, let's look at the 20-year Treasury bond ETF. We're still just flat. There's no buyers, there's no sellers. The world's not ending. That's what it's telling me. So again, between the dollar and treasuries, bonds is not telling us this market is going to blow up, because first of all, we're not getting the bid. We'd be getting a bid if everybody thought the market was going to pop, breakdown, whatever. So again, this is another catalyst that I'm looking at that sort of gives me the premise. I think we're stuck in this range. And honestly, it may be a couple steps down, but we're still going to continue in a range, is my thought. All right, jumping over to the SPY, the select or Spider S&P 500 ETF. I think this little 5 wave is where we are. Now that, of course, is going to extend our wave down if that is the case. So it's going to get a little deeper. If this is an impulse down, right, still going to be an ABC. We can get this actually could be done here because we have this trend support or speed line here that we're just we basically just tagged it. Right to it, boom. However, we haven't taken out this above candle, so to me, it's not done yet. So I think this is very valid. So I'm thinking that, maybe we get something like this, a back test down to about 563. Let's jump over to the NASDAQ. Very similar look. However, this ABC could be done right here. We've taken out our prior speed line. Our next speed line that we're going to have here coming in comes a little bit lower, right down to here, maybe down to about 555. And I'm trying to visualize where our next speed line is. Truthfully, there's not another speed line except for way the heck down here. And I'm going to just draw that out because it's prominent. It sticks way out in my mind about where we potentially could go. And this is a very simple method. Thanks, Dale. This is one of the greatest tools that I've learned, because the market is basically a large broadening formation. Either we're pumping, right? But however, our range is where we back test. So right here, we have no corrective leg to measure the short side. So it's way the heck down here. So we got 397. So this breaks, right? This break right here at this 539. This is where our equality is. That is our next magnet on that ledge. So it's quite a ways down there. It is. I'm not going to say it's not. But I think a lot has to happen between where we are now and then for us to get there. So, we need more of a catalyst. If you look at the RSI, we are kind of bottoming here, but we're still confirming, on this last leg down. So, at that point, without divergence, my rule is very simple. We're always looking for at least one more lower low in price with a higher low in RSI. That's the structure. MACD cross does not support this ending. All right. Now I'm going to bring in the Dow today. We are right at this shelf wick below it. Now realize the body is the important part. It's 454. We didn't close below it. However, this really has no back tap. So if that's the case, this is an impulse down. I mean, as far as structure, if it doesn't end here, there really is not a corrective leg. So if it's going to be the impulse, it's pretty deep. I mean, we're talking, if you look at your fib extensions down here, I mean, we could be back down to about 396. I don't see an ABC structure here at all. So, when you look at Dow theory, all four of the indices must be going in one direction to be in an uptrend or in one direction to be in a downtrend. Additionally, if we come down and we look at the MACD or RSI, we confirmed on this last low. So again, what are we looking for? At least one more lower low in price with a higher low in RSI. And I would classify the MACD as broadening. So it's telling me it's not done either. Now look at the Russells. Now where we saw some relative strength, we did get a nice little bounce here. It held. We take out that high at 252. We could be done. This could be, A, B, and this could be C. And, we had an elongated C, which, happens a lot in corrective legs. So, technically, out of all four of the indices, the Russell looks like the most likely to bounce. All right. Now, that said, let me come in and drop my speed line in here again, because we have this little thingy sitting way the heck down here, which is quite lower. Now we've taken it, if we look at what the speed line was, we've taken that out. And the general rule with the speed line is if it takes it out, you're now looking for the next shelf. So it took it out, body closed below it, right? So technically took it out. So this theoretically is a dead cat bounce on it. But there's a lot of noise here. We have another speed line a little bit lower, and I'm just looking at the ledges on the way up. I mean, they're fairly deep retraces that have occurred. So, our numbers come way the heck down here. We potentially could get down to 216, down to 195 here if this is going to break lower. But if we look at the history of the tape, what do we like to do? Look at this formation up here that we have. We have this grouping 1, grouping 2. I'm going to call that 2, peaking drive 2, peaking drive 3. A little distorted, more like a head and shoulders, but a shallow head, okay, structurally. So let me bring in this pattern tool. All right, so this is what is the projection in the forecast as far as the leg is concerned. Now I'm doing this with Russells for a reason. Now this is what we see as far as an ascending wedge. So it's broken, right? In that case, if my memory serves me correct, and realize there's so many different technical tools that sometimes it's difficult to remember them all. But they all have something that plays out. So, and I'm noticing I already have a red one here. Let me just make that a little bigger. It's visual. All right. So in that sense, our golden box between the 382 and the 786. So we got this range. So 233 is a good spot for us to try and bounce if we're going to bounce. But notice we're below this ledge here on this breakdown. We broke below it. So the next ledge really comes in around 228. So right at this, we have some confluence right here as far as this other shelf breaking down. And I'm spending a little time here on the, forgive me, I got to close these things now because they're in the way. All right, if we look at our sell side imbalance here, we got two spots that basically continue to repeat and show up in the tape. So we got like this band right here, right? Now we're going to pull this right over. So that comes in a little bit lower, right around 225. That is the highest confluence zone right now on this chart as far as a bounce is concerned. All right, let's take a look at Bitcoin. IDK here. We could be at a floor. Structurally, it looks good. Okay, I'm looking at this. You got peaking drive 1, peaking drive 2, and there's really a combination here, which you can have 3 drives at each peak, 3 solid drives right at the top. Structurally, this is a good spot. On top of that, if you look at where the speed line was in there, and sometimes I migrate to this and migrate away from it, but we've got a little bit of a deeper speed line here, a little bit of a deeper speed line here. It's got some distortion in this look here, though. That's the thing. So was this a head and shoulders? No, not at this point. Now let me bring back in the projection on this as far as the pattern. So it looks like, if we don't clear this 76,000, we're going to test 46,000, which I like the idea to get a piece or try and get a piece on there. However, I see my 5 wave. So whenever your time frame analysis and your whether it be a weekly, monthly, daily, 4 hour, 15 minute, realize all of the wave patterns that exist within those waves migrate to account in a specific way, whether it be an ABC structure, whether it be an equal ABC structure, an extended ABC structure, which is either an extended A or an extended C, an elongated C structure, which is either an elongated A or an elongated C, or an ABC structure. Now, or an impulse wave structure, which typically wave 3 is the longest wave, except for in leading or ending diagonals. In that case, sometimes 5 can be the longest wave, and sometimes 1 can be the longest wave. There's no rhyme or reason that I've found in those, but the broadening formation that occurs in a leading or an ending diagonal is very tradable, and they usually are very profitable if you happen to be on the right side of those trades. So, my general consensus, unless we clear 77,000, we're bearish. All right, let's look at our core positions. Okay, CleanSpark, and I'm just going to leave this tool up here at the moment. We haven't gotten to my GTC order yet, sort of just sitting there. I don't know that it pulls up. I like it to the upside. I think this, there was this story that came out on repos, which on GitHub, Gitmore, which is where everything, when you write something in script or code, whether it be a website or an app, it's on Git. Right. And the story came out that somebody wrote a fantastic code, was a little sloppy. That's the only reason anybody caught it. But they had embedded a virus on the repo, and it had 75,000 downloads. Basically, what it did is it copied everything on the system and it sent it to a Chinese server. So that is where security kind stocks that relate to the internet become more and more critical, because now we're going to have to figure out a way how to see that, because basically the only reason they found it, none of the existing scanners for malware saw it, right? And all the systems that downloaded it, I mean, we're talking all kinds of systems downloaded it because it was such an impressive piece of code. Everybody wanted to review it, including me, right? However, I download to specifically one drive, which isn't connected to my other one. I have to flip a switch to go from one to the other, but that's because I don't want to ever be in that situation like I have been at one other time in my career. So this is one of the names that's on our AI infrastructure list under, malware and that category, as far as making AI safer or making our data safer and how we access it. And I don't see that changing. So I really would love for it to get down to $7 so I can buy it. So that's the thought. Now we put a piece back on Moses. You look at the count here, we could drift a little bit lower, but I wanted a piece. My concept is the inputs are overdone here. And this is really what brought this down is that the input costs are going to be so extreme they can't make any margin. Well, I'm sorry. I don't care who's selling what. If they're selling this to agriculture to grow crops and we don't have any crops and they need to pay our higher input fees, and Mosaic raises their price as a result of that, they're going to make more in profit. I've never seen a corporate structure in America who is not passed on those expenses at some point. So with this drawdown and with how staple we know the fertilizer space is, this is one name I want to try and keep a piece on, because when we do get out of this flat, we're going to take out these highs at 72, and I like the idea. This is one of my position trade ideas that I want to hold. Okay. Now LXU, we added to that yesterday. I mean, beautiful look, and I'm just keeping a visual here so you guys can see. So I'm looking at it for $28. If I come out further in time, I want to go out to the monthly on this one because the upside is significant. I see us getting back up to $100. So again, under that fertilizer thesis, this is a name I want to hold. Now, Fortnite is under the AI infrastructure. Really hasn't gotten out of here. It says it's just going to kind of be stuck here. However, I just like the name. I like how it reacts. I like how similar this pullback was to this pullback. Notice that, we had our first one. So it likes XABC pattern, right? Now, here we got a little bit of flat. We're a little extended on it. That's the only thing I don't like. But what did we do? We built out a new leg to the upside. So we're going to build out a new leg up to the upside. So I see this going to $150. Again, this is one I'm looking at as a position trade. Now, we get down here to the standard deviation 2 again. I'll add. Gets down here, I'll add again. That's my intent with Fortnite. I don't plan on cutting. Well, let me back up first. My breaks below, we close below 42, then obviously I'd have to give in. But I don't know. All right. UAN is another one under fertilizer. Again, it's working, right? I think we're heading back up to the highs. The count, we're testing them right here at 177 roughly. I think. Are we above that? 181? We should show. Yeah, actually, we're above it at this point. So, our wave 3 is 661. Hey, we're heading up to the upside. All right, ICL. This is my look. I'm only looking for a back test of these highs, at $7. Smaller name, institutions aren't buying this because it's not above $10. So, but again, back under the fertilizer thesis, the potash thesis, that we just have some extraordinary pressure there. And that brings volatility, and hopefully we can catch a piece to that to the upside. IPI, same scenario. Going to head back towards this $63 again, which is why I'm there. Now, Corsair isn't working right now. Hasn't closed below the body of this candle. If it does that, then I'm out. I'll write it off. But right now, I'm like way upside down on that one. And options have been extremely challenging here. Unless you're really quick. As soon as you get your profit, you get a 30 or 50, 75% profit, whatever it is, you better book it because it's not going to be there. That's basically the consensus that I have right here, which makes it real challenging to hold any kind of swing because it's just not working. And the thesis changes when, I call it trumped, when Trump trumps us. And that's the way it is. So, all right. Now, we didn't have any requests that I noticed by the time I got to this. So we're just going to cover a couple names that, are working back to the upside. Now, according to the count here on Power Solutions, PSIX was a name that we covered. I like it back to the highs, 125. Big Sky. I like it back to the highs. Look at these counts up here. So $82 is on the table for Big Sky. I like this more than Planet Labs, right? Just the look. Because it's going to take this high out. 32. That's a nice move. Right now, 32, 34, 90 days out are some good strikes to put a piece on, which actually I'm going to price out, but not today. I'll have to look later on tonight or in the morning because I have at least a 5-hour wait at TSA here, and my flight's out later today, so I don't know about that. Let's pray to God I get on the plane and don't have to drive it. All right, so I think we're back to $56 here on Frog. SLV, I like it for long here. Look at, we're coming out of this, put it in, nice ABC structure, right? The only thing I don't like is RSI is still confirming, so maybe one more low, which this is showing us $58, get more excited at that level. But structurally, I think this goes back to about 140. RDT, I like it here as well. I think we get out, head back towards this 205. Now gold, let's look at gold. Gold is actually a good spot for a bounce heading back up to about 500. However, I'm not sold that the shelf hold. Very flushing RSI. MACD is wide open. And it probably tests the floor. If it tests the floor, it'll come down. And if that holds, we're using the phrase, if that holds, we'll probably come down and test this 369. Now realize what has just recently happened, which I believe this is the largest sell, if my memory serves me correct, in gold, in such a short period of time. What ultimately happened is you had all these countries who were buying it for the central banks. And with what just happened with oil and the spike in oil, their coffers were thin. They had no choice but to liquidate something. And gold happened to be what it was. That's what happened here. Now, does that mean it's going to stop here? It really depends on how bad this breaks out as far as what's going on in the Middle East. Because bottom line, their coffers are going to get heavy here because they can't let, one thing a country can't do is they can't let absolute, chaos occur because of fuel. And it wasn't Sri Lanka, and I'm not recalling it, forgive me, another country over there in Asia. Philippines. I knew I'd come up with it. They declared a state of emergency yesterday because the lack of fuel to move internal resources the country requires to survive. We're going to see more of those stories. So are they going to dip further into gold? Yeah, there's probably a good chance they do. So there's as much, if not my bias is slightly more bearish, but when I look at this bounce off of this ledge, technically, we're going to test these highs, and then maybe we reject and head lower on the next sell. So let's take a look at GEVO. Hey, we're going to break out here. We're going to take out these highs at about $3. So $3.36, $3 You can even do 6 months out or even leaps if they're fairly decently priced. I haven't looked at them. So that's what I have for today, folks. Great trading, and we hopefully will get some stuff done over the weekend. If not, I'll keep tabs and tell you exactly what's going on as it progresses here, folks. I appreciate your support. Great trading. Until next time.